you've got to take action now to diversify your assets internationally, get your money out of the banks. The banks there'll be bail-ins. You're getting 0% at the bank, and you're not, you're lending the money to the bank, right?
Okay, on location, StockPulse.com. Vancouver Resource Investment Conference 2020. I've got Peter Spina. He runs goldseek.com. Peter, always a pleasure to talk to you here. Pretty exciting 2019. I kind of want to run through it, but how's things been going on your end?
Great, Rob. It's great to be back, and we're excited for 2020. 2019 was quite a year, and it's setting the stage up for the next year and decade ahead.
Yeah, so metal's in a good spot here. Let's kind of recap 19. Anything that surprised you per se?
Well, I wouldn't say a surprise. Last year at this conference, we were talking about how interest rates were rising, how that was unsustainable, how quantitative easing was not going to sustain itself. Globally, quantitative tightening had been taking place, but in the last year, that's a big thing. We've gone to quantitative easing. So I think the most amazing thing is how the Federal Reserve quietly went from quantitative tightening and then quantitative easing. It was a Friday afternoon. People weren't paying attention. 2-paragraph press release, $60 billion a month in Treasury buying, $500 billion in new quantitative easing. That's 10,000 tons of gold. I mean, what the heck's going on? Rates were going up, and now they're going down. Now we have repo operations. We've got the balance sheet blowing up. So, boy, 2019 was quite the year. Not shocking, per se, as someone who follows it, but I think for Wall Street, it's a wake-up call. Yeah, I think
Yeah, and as I say, they've pretty much telegraphed money's going to be free forever.
Sure, they can't stop this. It's a Ponzi scheme. The second they try to withdraw liquidity from the system, it starts to fall apart. So here we are, quantitative easing to whatever the infinity.
I think they call it quantitative easing kitchen sink, QE kitchen sink. They're throwing everything at it. So let's talk about the dollar here. The dollar's I talked to Peter Schiff the other day, and I said the dollar is Bernie, a weekend at Bernie's. They're holding it up.
Yes.
When does that end? When can they not pump it full enough to keep it going?
Well, like they say, things happen gradually and slowly, and then it happens all at once. And I think with the dollar, that's what we're going to see. Right now, the dollar has its advantages over other fiat currencies. So versus the euro, the yen, the won, the dollar looks strong. You still can get a positive yield on a 10-year. I mean, the real yield on a 10-year Treasury bond is probably zero or negative. But comparative to Germany, they have negative rates. The U.S. is still stable, so it has a traction and pull. There's a dollar shortage going on right now. It's deflation. When you can't pay back your debts, then you go through a deflationary period. The dollar's in shortages. So that's really the repo operation and the quantitative easing is trying to add liquidity to the system, but they're fighting. They don't want a strong dollar. They're fighting the shortage of dollars out there. So we're in this kind of weird period now where the dollar is going to continue to look relatively strong, but you'll see that relative strength against other currencies, but the ultimate measurement is gold, and now we're starting to see the revaluation. And I think the big thing that'll happen in the next 5 to 10 years, probably in Trump's second term, he talks about wanting to cheapen the dollar and cheapen the debt, and that requires to cheapen the dollar. And how he does that, I think there's questions, but I think gold, that's one way to do it. You can revalue versus the gold price. So I think that's coming.
So I guess that was one of your predictions then, a 2020 presidency for Trump, a second term, huh?
Absolutely. I think he's got it. I mean, there's a lot of things that are going down. I think they're trying to kick him out, and there's a lot of things that are going on, but I think Trump has a lot more support than he probably did last term. The markets are still doing well. Obviously, the economy is going through a historic 10-plus years of expansion, and the next cycle's coming. But I think we have enough time until elections that he can kind of sustain it, sustain the markets, and things have done well. I mean, in the end, people always look at their pockets, how well their stocks are doing, and so on. So things are in his favor, and a lot of people were afraid of him in 2016. How he would act as a leader. I'm sure the media and some of the media portrays him in certain ways, but overall, I think people do see that he's done a lot of good things. He hasn't started a new war. Unlike Obama.
Might have stopped one.
He might have stopped one. There's a lot of other, he's deregulated a lot of things. He's been pro-business. He's not a communist, which, you see the left, the Democrats, they're turning into full-blown communists. I think there's enough people in the center that are scared of what's happening in the Democratic Party. They're going so extreme to the left. And my fear is after Trump, what comes next, and that's where you start to get. I'm a little worried. So I don't know how this all plays out in the next 5-10 years politically, but I have some fears that we're going too far to the left, and that could, that's. I think people need to prepare themselves now for that situation, because they will come after people with wealth. When you have these unsustainable deficits, they're going to start confiscating wealth, whether it's devaluation through the currency or directly taxing people more or whatever. It's coming. So now is the time to protect yourself, because if they do institute capital controls, it's too late at that point. So you've got to take action now to diversify your assets internationally, get your money out of the banks. The banks there'll be bail-ins. You're getting 0% at the bank, and you're not, you're lending the money to the bank, right? Where do you hide right now? That's really the problem. Is the stock market's record valuations, things are extreme, real estate and all this. So gold obviously is one of the real commodities are also pretty cheap, but I think the monetary metals will outperform, and it's good to hold hold in a physical bullion, or hold it in certain locations, not all in the one place, whether it's outside the United States, different locations and so on. And
backyard and buckets?
Wherever you find a good spot, you don't need to tell me, but I would. That could be a good spot, yes.
So you've made some, we talked a couple months ago, you made a pretty aggressive call for gold, possibly 2,000. I concur with you 100%. Let's talk about silver. How do you see silver reacting here?
Well, so silver is playing catch up. We had near a record ratio in the gold-silver ratio. It was 95 last year, and then kind of starting to reset. So you're starting to see the market turn over. Usually in these situations, gold goes first. It leads the silver price higher. Silver is a high beta precious metal, and it's more industrial use. A lot of the crypto investors were silver investors. They kind of left the market. So you've seen a really weak retail demand and so on, but now it's starting to kind of reverse. And it's a tiny, tiny market. In July, when the silver price started to break out of a downtrend, we had 1 week where we had 20 million ounces of silver purchased in the silver ETFs. That was a huge buy. In dollar cents, 20 million ounces, that's a few, it's pennies. It's what's probably the interest on the federal debt in one day. But that amount of silver was more than what was mined in 1 week. I think he mined 14 or 16 million ounces of silver. So when any sort of a little bit of investment demand comes in silver, watch out.
Did palladium kind of give us a signal here?
Exactly. The second you get that constraint between supply and demand, you get shortages, and you get the auction and price, and then watch out. You get a silver. $50 is coming again. If gold is going to 2,000 plus, silver can get back up there. And if gold is really going to 2, 3, 5, maybe even 10,000, then silver is going to go through the roof. But at that point, what's a dollar worth? It's all relative, and you're just trying to protect your wealth. You're trying to preserve your wealth in these metals. But I think at this point, there's such extremes that you can come out of this during a financial crisis looking pretty strong relative to everyone else. So it's very important right now to have some protection, safety. Wall Street, they get it. That was a big thing last year. Billionaires left and right buying gold. Wall Street's having its aha moment. They see what's happening with the Fed, and they see that things aren't as great as they thought it would be.
Yeah. So you made a good case here for gold and silver, but let's talk a little about these equities here. You built a career around analyzing these things here. So here we are, a lot of dilution. Argue the sector's been decimated in the last decade. These companies are worth fractions of what they were. But yeah, there's a good vibe in here. There's a lot of companies, a lot of good companies. Why don't you talk about playing the equities markets?
I think this is one of the best opportunities for investing in the equities that I've seen. I started off as a teenager investing in precious metal stocks, and 25 plus years later, nothing has ever been this favorable for the miners and the exploration stocks. I think right now you can do better with the miners, but the exploration stocks, they're going to have their day 3, 6, 12, whatever months from now out. Everything is going to lift together. But if you want to take a little less risk, one of the stocks I'm buying right now is Fortuna Silver. They're putting in another 150,000 ounce a year mine. Obviously a little more risky in Argentina, but you have some of these assets out there that should be trading at 3, 4, 5 times what they are right now. And that's at these metal prices. So if you get, I like silver. A little more risky, but some companies that mine gold and silver, you have the stability of gold and then the upside leverage to silver. So I like companies like that. exploration. Obviously, it's been highly underexplored the last 10 years. We haven't seen a lot of new deposits, so these companies out here, there's some of them out there that are going to be acquired, that are going to do very well. It's just a question of timing. Like you said, dilution has been an issue for the last 10 years to keep the lights on and pay the accountants and the exchange fees and all sort of things. But we're at the point now where the prices are starting to reverse and things are starting to improve. So I think now we're looking at one of the best opportunities. I think you could easily make 5-10 times your money on just regular mining companies, and you're going to have situations out here where some of these companies Silvercrest Metals went from 10 cents a share in 2016 to almost $10 a share. So, stick with good management, stick with good projects, and the next cycle starting. So this is a good time to be positioning yourself.
What do you say to the millennials who don't quite get this sector? They don't grasp, I think, that their phone wouldn't exist, their computer wouldn't exist, let alone the monetary side. There's a lot of strategic metals here. Talk to these millennials and get them interested, Peter.
I try. I thought the crypto boom was beneficial in teaching a lot of the younger generation what money is, and that there's a monopoly of this, I call it communal communist money, the central banks that produces money. It's not money, it's a currency, it's fake money. So they kind of got that point a little bit more, but they kind of got sucked in too much of the crypto side and don't realize, they don't fully grasp it. How do you get them to understand it? I don't know. It's a very difficult conversation. They're not interested, they hate mining, but they, like you said, they want all the benefits of the metals that come from mining. So maybe the best thing to happen is take away the metals and they won't have their phones, and then they'll have to get interested. I don't know. I don't know.
That's a pretty ugly world there. So give me one surprise you might think in 2020. Anything that might shock you or?
Well, I think we're going to start seeing more political issues, social unrest, and we're starting to see that from Hong Kong, Lebanon, Chile, Venezuela. I think this is brewing. I mean, the last 10
Iran.
years. Iran. I mean, I think Iran could be one of the big surprises this year. I think there's a huge economic problem. Their inflation's taking off. They have economic depression. People are losing their jobs. Their inflation rate's going through the roof. There's a potential for that to change. But the last 10, 15 years, the middle class has gotten squeezed. We've had the socialism for the rich, where the central banks are bailing out their very, very rich buddies, and the middle class suffer. So you have these growing divides, and it's going to lead to more and more social upheavals around the world. But I think Iran's a good one. Yeah.
Okay, well there you have it. It's Peter Spina. He runs goldseek.com. What's the best way to follow you? The site, or you got?
Yes, that, and I'm pretty active on Twitter. At Goldseek is my username handle. So goldseek.com, SilverSeek, and Twitter.
There you have it, Peter Spina. Appreciate the time.
Likewise. Thanks, Rob.